Welcome, folks. Tonight, we're tackling the one thing that keeps small business owners up at night: cash flow. You've made the sales, delivered the goods, but your bank account still looks empty. Juggling invoices, chasing payments, and paying your own bills, it's a circus act with numbers. You need supplies to keep your business running, but customers might not pay for 30, 60, even 90 days. That waiting game can make even the most optimistic entrepreneur anxious. But what if there was a tool to help you get what you need now and pay later? It's called trade credit, and it could change your business game. Let's dive in. So what is trade credit? Imagine you're a baker. Instead of paying your supplier right away, you get 30 days to pay. This is trade credit. Terms like net 30 mean you have 30 days to pay. Sometimes you get discounts for paying early. Why does this matter? Trade credit smooths out your cash flow roller coaster. You get supplies, make products, sell them, and pay your supplier later. That means more cash on hand for marketing, payroll, or keeping the lights on. It's like a flexible, interest-free loan from your suppliers. More products, more sales, more growth. Trade credit helps you manage your working capital. See the possibilities? Trade credit sounds great, but what if your customers don't pay you on time? Enter trade credit insurance. It protects your business if customers default or pay late. If an insured customer fails to pay, the insurance company covers a big chunk of that debt. It covers commercial debts, both domestic and international, giving you confidence to expand. Lenders like businesses with this insurance, so it can help you get better financing. It's a safety net that lets you offer better terms and grow with less risk. Knowing about trade credit is one thing. Using it well is another. Build strong relationships with your suppliers, pay on time, and take advantage of early payment discounts. Good payment history builds trust and can lead to better terms, like longer payment windows or higher credit limits. Don't be afraid to negotiate once you've proven yourself. Suppliers want your business too. It's a partnership. Use trade credit strategically during busy seasons to stock up without draining your cash. For example, before the holidays, use credit to buy inventory, sell it, then pay suppliers after the sales roll in. Smart use of trade credit helps you meet demand and maximize sales. Think about your own busy seasons. How could trade credit help you? It's all about timing and trust. Trade credit insurance is great, but you need more than just insurance. Do your homework on new customers before offering them credit. Run credit checks and ask for trade references. Set clear credit limits based on each customer's history and your own risk tolerance. Communicate your terms and have a written credit policy. Keep a close eye on accounts receivable. Track who owes you and when it's due. Send reminders and follow up on overdue invoices. Don't rely too much on one or two big customers. Diversify to spread risk. Proactive management keeps your cash flow healthy. Combine these habits with insurance for a strong defense. Stay in control and avoid surprises. Let's see trade credit in action. Tina's boutique gets net 60 terms from her distributor, so she stocks up, sells, and pays later. No cash crunch. A digital agency uses trade credit with software providers and freelancers to manage project costs until client payments come in. Tony's Taco Temple buys ingredients on net 15, sells tacos, and pays suppliers after the revenue rolls in. Service businesses use trade credit too. 8 consultants, construction companies, you name it. It's not just for goods, it's for services and rentals as well. Trade credit gives businesses flexibility to operate and grow. It's the buy now, pay later power that keeps things moving. Whatever your industry, trade credit can help you seize opportunities. How could it work for you? Trade credit isn't just about delaying payments. It's a strategic tool for growth. It helps you manage cash flow, seize opportunities, and build strong supplier relationships. But it comes with responsibility. Manage risks, set limits, and pay on time. Be proactive. Check customer credit monitor payments and use insurance if needed. Trade credit is a powerful instrument in your business toolkit. When managed well, it creates flexibility and resilience. Combine it with smart practices for real success. You've got what it takes to make it work. We've covered the essentials of trade credit and how it can transform your business. Now think about your own business. Are you using trade credit strategically? Could it help you grow, manage cash flow, or take on bigger opportunities? What's one step you can take this week to explore trade credit options? The world of small business is challenging, but tools like trade credit make it easier. Go out there, build relationships, and use these strategies to build your dream business.